Welcome to our comprehensive guide on Islamic economics, an economic system that aligns with the principles of Sharia law. Whether you're a business owner, student, or simply keen to understand this system, this video is for you. In this video, we'll cover the fundamental concepts of Islamic economics, including the prohibition of riba, interest, the importance of zakat, charitable giving, the concept of risk sharing in businesses, and more. Let's dive in. First, let's talk about riba. In Islam, riba is strictly prohibited. It is defined as an increase in capital without any services provided or risk taken. Consider this example. A person lends $1,000 to a friend with the agreement that the friend will pay back $1,100 after 1 year. The extra $100 is considered riba and is not permissible according to Islamic law. Now, let's discuss zakat. Zakat is a form of almsgiving and religious tax in Islamic law. It is one of the 5 pillars of Islam and serves as a means to clean and purify one's wealth. For instance, if you own wealth amounting to or above the nisab threshold for a lunar year, you are required to pay 2.5% of that wealth as zakat. Next, let's explore the Islamic concept of risk sharing. In Islamic economics, profit and loss must be shared among all partners involved. This is different from traditional interest-based financing where the lender assumes no risk. For example, in a mudaraba agreement, one party provides the capital while the other provides expertise and management. Both share the profits according to a pre-agreed ratio, but losses are borne by the capital provider. Let's look at some real-world scenarios. Assume a company follows Islamic principles and engages in a musharaka partnership, where multiple partners contribute capital and share the profits and losses. In a musharaka venture, if the partners invest $100,000 equally and the venture makes a profit of $30,000, then the profit is distributed based on their contributed capital. If the venture incurs a loss of $10,000, each partner will bear the loss according to their capital proportion. It's important to understand the concept of Sharia-compliant investments. These are investments in businesses that conform to Islamic law, avoiding industries like alcohol, gambling, and pork. Consider an Islamic mutual fund that invests in technology and healthcare sectors, but steers clear of firms involved in gambling. Such funds align the investment strategy with Islamic principles. To ensure businesses comply with Islamic principles, there are Sharia boards, which consist of Islamic scholars who review and approve product offerings and business activities. For instance, a Sharia board might evaluate whether the structure of an Islamic bond, sukuk, aligns with Islamic law before allowing it to be issued. Now let's move on to some data and statistics to showcase the growth and impact of Islamic finance globally. According to the Islamic Financial Services Board, IFSB, the global Islamic finance industry was estimated to be worth around $2.44 trillion in 2019. A significant portion of this market is driven by the Gulf Cooperation Council, GCC, countries, with substantial contributions from Malaysia and Indonesia as well. Let's address some commonly asked questions regarding Islamic economics. Q1. How is Islamic finance different from conventional finance? 1. Islamic finance prohibits interest, riba, and emphasizes risk-sharing and ethical investing, whereas conventional finance is interest-based and driven primarily by profit maximization. Q2. Is investing in stocks allowed in Islam? 2. Yes, but only if the companies adhere to Sharia principles, avoiding industries like alcohol, gambling, and pork. Q3. How does the concept of zakat impact the economy? 3. Zakat promotes wealth distribution and social welfare by obligating the affluent to support the needy, thereby reducing inequality. To conclude, Islamic economics is not just a theoretical framework but a practical system with profound ethical and social implications. Its emphasis on fairness, risk-sharing, and social justice offers valuable lessons for modern economics. Thank you for joining us in this in-depth exploration of Islamic economics. If you have any questions or would like further information, please leave a comment below. Don't forget to like, share, and subscribe for more insightful videos.